Remember when every home in the Greater Toronto Area received multiple offers and sold over asking? Well, those days are long gone. For the first time in many, many years, Toronto buyers have all the leverage, but it may not last long. So if you're thinking about buying or selling in the remainder of 2025 or maybe even early 2026, you're going to want to pay attention. My name is Morgan Little. I'm a realtor here in the Greater Toronto Area who brings you the facts and stats every single month to keep you up to date on what's happening in the Greater Toronto Area housing market. Now, let's get into it. Starting with a look at the overall market over the last month, and then we'll talk about what we can expect moving into the fall. There were 6,200 total sales in July 2025. That's up 11% year over year, reaching the highest level since 2021. We'll talk about that a bit more in a minute. There were 17,613 new listings that came to the market in July. That's an increase of 5.7% compared to the same time, July 2024. All those have added up to the total number of listings, which are at 30,215 active listings on the market currently. Lots of opportunity for buyers. That's up over 26% year over year. That's the largest amount of inventory we've seen over the last 4 years. Again, we'll touch on that. Average price, $1.05 million. That's down. The one number that's down, and where we've been continuing to see softening prices. That's down 5.5 points from last year, with the benchmark price at $981,000. So while sales are up, inventory is rising even faster, giving buyers more options and negotiating power than we've seen in many years. That is true. The thing about the sales being up is we did have more sales in July than we had in April this year, which is rare. That doesn't tend to happen. Spring tends to be the busiest time of the year, spring and fall, like what we're moving into. So yes, home sales rose to the highest level since 2021. There was a lot of headlines around that, but what does that really mean? Well, first of all, 2021 was an anomaly, and we'll likely never see that amount of action again. And comparing that increase in the amount of home sales to other months in one of the slowest years in recent history isn't saying that much. So take that with a grain of salt. The fact is, we saw an increase in sales recently, meaning that buyers and sellers are becoming more in agreement with the value of homes, which is, how a sale gets done. But there's been a disconnect there for quite a while. It's been one of the biggest sticking points. Buyers are no longer willing to pay inflated prices, and sellers who may have been stuck on COVID prices many years later, or even stuck on what their neighbor might have sold for, a year or two ago, those numbers are not comparable anymore. So there seems to be a lessening gap between what buyers are willing to pay and what sellers are willing to accept. Or, and I'll get to this a little bit later, those sellers are delisting, canceling, terminating, or letting their contracts expire. But moving on, we'll talk about that more in a second. So beyond the headlines, let's see what's happening here. July sales outpaced April, like I discussed, which is, spring market and fall are the busiest. They're the two anchors of the year, the busiest times. But like I said, comparing to 2021, that's not really saying much. And then we have average days on market, which is the average amount of time it's taking for a home that does sell to sell, which is 41 days now. That's up 14%. So, it coincides with everything else we've been saying, with the market being quite a bit slower than we're used to seeing, even though it's been summer. Let's look at the absorption rate, which is a true market indicator. And what that means is it's months of inventory. So essentially, if no homes were to come on the market, this is how long it would take for all of the homes to sell. And typically, we would say 0 to 3 months would be a seller's market, 3 to 6 would be a balanced market, and over 6 would be a buyer's market. We are at 4.7 in Toronto and 4.6 in Mississauga, which, technically puts us in a balanced market, but anyone who's on the ground these days know we're firmly planted in a buyer's market. So something to keep in mind if you are a buyer, if you've been holding off, waiting on the sidelines, you have the leverage now. We'll see if things are going to change as we move into fall, but now is your time if you're ready to get into the market. So a couple things we're going to look out for this fall are the interest rate decisions. Bank of Canada, September 17th is announcing whether or not they're going to change interest rates again. They've held for 3 consecutive times now. There are mixed predictions now. Some are saying that they're not expecting any now, even though we were previously. And then some people are still calling for it, maybe 25 basis points. There's 3 decisions left. So maybe 25 basis point at one, maybe 25 basis point at another. But the thing is with interest rates right now, they're actually not bad. Fixed rates, I just heard Ron Butler discuss being able to get 3.69. I don't know which bank he was referring to, but that's a that's a great rate. If you can get that now, there were stipulations. I think you had to close by the end of September, so it's not for everybody. But just goes to show that interest rates are not really moving the needle now. Even if we do get a little 25 basis point cut, is that going to make a difference? Because rates are already down fairly significantly at this point. So we'll see what happens. The news of that can often spur a little bit of activity, even though that's in reference to variable rates and not fixed rates. But that's I've talked about that a lot on this channel, so we won't get into that right now. But I did mention earlier that sellers who have let their listings expire, terminate, cancel, a lot of them might be coming back onto the market in anticipation of the fall being a busy season, like we discussed. So if that's the case, we're already seeing record level, inventory levels. So with more people who have tried, maybe tested the market or didn't get what they want, coming back to the market in the fall, that could push numbers up even further, unless we do see a trickle in of buyers that, at a similar rate that could absorb some of that inventory. We'll have to see what happens there. And then the last thing is the price psychology, right? Like I talked about, the gap between seller expectations and buyer willingness. Is that going to continue to get closer? Or are sellers going to come out hot expecting, big things in the fall market? These are the things we're going to have to watch out for as we move into the fall. And, you can see here where prices have really come down last year, August. And then as we move through April, June, and here we are in July. So you can see just like that's a good visualization of where prices were and where we're at now. Prices have continued to soften. A lot of people call for this market crash. We're going to lose 40, 50, 60%. We've seen a big, if this kept going to 2022, they were up here. So we've seen a big drastic come down, and prices may continue to soften. But I don't think we're going to see any more crazy drop downs. We're in the correction. This is the correction. Whether we're at the bottom or not remains to be seen. We might go a little bit lower, but again, if you're ready, timing the market isn't really your best bet. Time in the market is, right? So that old adage. So as a buyer, like I mentioned, you have unprecedented leverage. We haven't seen this ever, or for quite a long time in recent history. So you have more options, there's less competition. Houses are sitting there. And like I said, buyers are starting to get fatigued and willing to be a little more realistic on their prices. You have greater negotiating power. So don't be afraid to get out there and make offers if you're in a position, only if you're in a position to do so. Time is on your side. You can take your time. You can do inspections. You can have financing clauses, all that good stuff that didn't exist just a few years ago. But don't assume that this is going to last forever. If we do see some more rate drops, that could bring people in. The fall market might bring more people in. So this window won't last forever if you're a buyer looking for a good deal. What does it mean for sellers? Well, pricing, and I've talked about this, pricing, packaging is everything. Overpricing is the kiss of death in this market. Prices that are staged well, presented well, priced well, they are selling. Don't get it twisted. There are homes that are still selling, in 7, 14, 21 days. Those are the homes that, are sought after and priced well. Presentation matters, as always. With more inventory, buyers can be choosier. So, staging, photography, any, repairs that need to be done, get fixed. Otherwise, you're going to have to price accordingly. Like I said, if your house needs a lot of repairs, you will have to price low potentially to try and attract some offers. And you narrow the buyer pool when you have to do a bunch of repairs. Not all first-time home buyers or downsizers are going to want to do a bunch of repairs. So be flexible. Be prepared to negotiate on price if you can have flexible closing dates, and accept that people are going to have conditions. These are just things that you're going to have to learn to deal with if you want to sell in this market. Let's keep it going here. So where is the most action happening, or where opportunities are happening? Toronto's East End properties in areas like Leslieville and the Beaches are seeing less price pressure than downtown, for sure. Those, semi-detached homes and, entry-level detached homes are selling in those areas. Average days on market 35, so a little less than the 41 average of the city. In Mississauga, if you're looking there, family homes near Square One are showing resilience. They only 3.8% year over year price drops, which is better than the overall GTA average. So if you're looking in there, prices are holding strong. But if you're looking there, you're looking at a quality home that will continue to perform well. Condo market, it's probably, if you haven't been under a rock, you're probably aware that the condo market is a ghost town. So they've seen the most significant drop, 7.2% year over year. But that's creating a lot of entry-level buying opportunities. If a condo is right for you, you have your pick of the litter at this point. But as always, each micro market behaves differently. And for a detailed analysis of your situation, your neighborhood, your property type, reach out. We can go over that together. And so remember, in fall 2025, strategy matters more than ever. The fall market will be about balance shifting, not just prices, but psychology. Success depends on understanding the nuances of your specific situation. Like I just mentioned, to discuss yours, we can do that. We can get a custom market analysis of your specific neighborhood and property type. And for buyers, if you don't have a pre-approval yet, do that. That's step number one. I tell this to people all the time. People want to go out, start seeing homes, but what type of home, how much home should you be looking at? Get the pre-approval done. If you would like a mortgage broker contact, just shoot me a message and I will happily share those with you. And like I said, let's just schedule a no obligation consultation if you are feeling like you're ready. We hop on a Zoom call, we can meet in person and, just discuss your situation, see if it makes sense for you to make a move at this point. So that's it for this one. As always, happy to hear your thoughts. Let me know below if I can be of any help. There will be a Calendly link in the description below, or simply shoot me a text and I'm happy to have that chat. Till then, see you on the next one.